Okay, and this is the January 2021 Finance Committee meeting. This is Steve Miller, other board members, committee members, Ms. Godfrey, Ms. Leone, and Ms. Olson, Dr. Cooper, Ms. Haynes, and Mr. Harley with us. Fairly short agenda, although limited items on the agenda, but we could take some time to get into, so why don't we just get started with the audit review.
Great. Good evening. My name is Roxanne McMurtry from Herbert & Company.
I can hear you.
Sorry, I couldn't hear what they were saying, so they're good for me to start now, Kathy?
Yeah, go ahead.
Yeah. All right. Sorry about that. Good evening. My name is Roxanne McMurtry from Herbert & Company, for those that don't know me. I'm with you tonight to present the audit for the year ending June 30th, 2020. So in front of you, you should have what we're doing now for our clients. It's basically a summary of the audit and the audited financial statements. So we did also provide the actual audited financial statements, so you can read through those in their entirety and let me know later if you have any questions about that. But as of right now, what we're going to be going through is the summary that does summarize the results of the audit. So on the first page, it says overview. I'm just going to kind of reference the top of each page so we can all read together as we go through it. We're just letting you know what we're going through in here. We're going to review the audit and report for the year ending June 30th, 2020, go through those 2020 financial highlights, discuss your federal awards, which is your single audit, and go over some required communications. And at the very bottom of this page, we just have a note that this information is just for use of management and the board of directors. We just don't want this to be misconstrued as the actual audited financial statements. We flip to the next page, it says introduction. This page basically just lets you know that our audit is conducted under generally accepted auditing standards, government auditing standards, which is also known as GALA, and uniform grant guidance, which would be the single audit for those federal programs. We're letting you know that our responsibility is to opine on whether your financial statements are fairly presented in all two respects in conformity with U.S. generally accepted accounting principles, which is also known as GAAP. And then we're also going to opine on the district's compliance with corrected material compliance requirements related to major federal programs subject to testing and teacher single audit. And the next page that says auditor opinions, you can see on here under generally accepted auditing standards, you can have an unmodified opinion after we did do some audit adjustments. Uniform grant guidance, you also have an unmodified opinion. And a modified opinion is a pre-known opinion from an independent auditor, so that is the highest level opinion that we can issue. The next page that says general fund budget and actual at the top. This is just a snapshot of the budgetary comparisons data that is towards the back of the audited financial statements. 3 lines from the bottom of this page, it says net change in fund balance. You can see that the district did budget to use fund balance of approximately $1.3 million. And you had an actual increase in fund balance at the end of the year of approximately $1.2 million. So a positive variance there of approximately $2.5 million. On the next 2 slides, we'll go into the revenues and the expenditures in more detail. So I'm not really going to spend a lot of time on this page because the next 2 pages will go into more detail. The next page then, it says general fund revenue at the top of it. This is a snapshot of your actual revenues in the general fund. So the orange highlighted line there, you can see your revenues in total came in over budget approximately $542,000, which is approximately 0.9%. Did I say under or over? I'm not sure if I just misspoke there. Under budget, they came in under budget, 0.9%. So pretty much right in line with budget, less than 1% there. Looking at the local sources, they came in over budget approximately $295,000. Your most significant variances were in your current and your interim real estate taxes, your earned income taxes, delinquent real estate taxes, and also the earnings on investments or interest. Your state sources did come in under budget there of approximately $110,000. The largest variances there were in your transportation and your retirement subsidies. And then the federal sources came in over budget approximately $356,000. And the largest variances there were in the coronavirus relief fund, which is obviously new money that wasn't budgeted, and then the medical access money. The next page that says general fund expenditures at the top of it. This is a snapshot of the expenditures of the general fund. So the very last line here that's highlighted in green, you can see your actual expenditures on the general fund came in under budget just under $1.5 million. This does exclude the other financing uses. So your total expenditures excluding those other financing uses were approximately 2.4% under budget. That consisted of savings in your total instructional services. The first orange highlighted line, those came in under budget approximately $171,000. Most of that was in your regular programs and mostly due to charter school tuition. You also had savings in your support services, the second orange highlighted line, that came in under budget approximately $1.2 million. Most of that was in your instructional staff, your business support services, your operation maintenance of camp, and the student transportation. Most of that was all due to the COVID-19 pandemic. Your student activities then, you can see the last orange highlighted line there, that came in under budget approximately $56,000, just due to variances of what was budget compared to estimates and how it came in compared to actuals. So, any questions so far?
No?
Okay, I'll keep going. The next page, it says general fund balance sheet at the top. Is a snapshot of the balance sheet for the general fund as of June 30th, 2020. You can see you had total assets just over $14 million, so you were $14.8 million there. Total liabilities of just over $6.5 million. Your total deferred inflows of resources, which is your unavailable revenue for your property taxes, was approximately $533,000. And then the last orange highlighted line is your total fund balance of $7,765,000. So within that fund balance there, the non-spendable line that says $32,340, that is due to the prepaid expenditures up in the assets section. That's money that was already spent, already out the door June 30th, so we consider that non-spendable. Your assigned fund balance line there, the $3,767,905. That consists of $2,040,480 for the budgeted deficit for the 2020-21 fiscal year, so budgeted expenditures in excess of revenue, and then also just over $1.7 million for your retirement rate increases. Your unassigned fund balance there at the end of the year, the last line, that's $3,964,987, is approximately 6.7% of your budgeted expenditures for the 2020-21 fiscal year, so that does fall within the threshold that's outlined in the district's fund balance policy. The next page then at the top says Capital Projects Fund. So this is a snapshot of your Capital Projects Fund for the 2020 fiscal year. Overall, at the very bottom, you can see the orange highlighted line. You had an increase in fund balance in this fund of approximately $154,000. Going through the actual income statement here, the local sources in your revenue was mostly interest income. Your expenditures were due to your capital projects this year. Your largest capital projects were the concrete work that was done in all the buildings, the HVAC units, and containers for all the buildings. So those were the largest projects there. In the other financing sources section, you have a transfer in of approximately $800,000. That's the budgeted transfer from the general fund for future capital needs. So adding that increase in fund balance there of approximately $154,000 to your beginning fund balance gives you ending fund balance at the end of the year of just over $3.3 million. That money is all restricted, and consists of all money that has been transferred from the general fund, from surplus funds.
Question.
The next page at the top.
I think it's probably for you, Kathleen. The $800,000, does that include the money that's been put away for the turf replacement, or is that separate?
Yes, it includes all the money. The money, that 3.3 includes the money. Everything in that balance includes the money for the turf replacement.
Yeah.
It's in there.
I was talking about the $800,000 transfer.
We always do an 800,000. It's in the bottom line of the budget.
Yeah, okay.
Yeah, that 800 is a budgeted item. But the turf replacement is definitely in the budget in that 3.3 million.
Okay, I'm just curious. It seems like with if we were including that, putting that away for every year, that the $154,000 wouldn't be enough.
Just because of COVID, we didn't really use anything. And there wasn't a lot of he could do when COVID was going on.
Yeah.
A lot of the stuff stopped.
Okay. No, but I thought we were putting money away every year for.
We do. We put money away every year, but it's part of the income. I forget how it goes in there, but it's already in there.
Okay.
Good?
Yep.
Okay. The next page at the top says Food Service Fund. Sorry, I just wanted to try to skip ahead. So at the top of where it says Food Service Fund, this is a snapshot of your income statement for the Food Service Fund for the year. The Food Service Fund is a proprietary fund, so that fund is reported on a full accrual basis of accounting. So that would be more like your regular for-profit businesses. So this, because it does function more like a regular business, we do like to show comparative information. Your actual audit and financial statements are not comparative, but we'd like to give you that information so you have that for your use. So looking through this statement here, you can see that last green highlighted line at the bottom for 2020 with an increase in net position or net income of just over $13,000 compared to last year just over $30,000 net income. The first orange highlighted line is your total operating revenues, which did decrease compared to the prior year, as well as your operating expenses, the second orange highlighted line. Both of those decreases were due to the result of the school closure from the COVID-19 pandemic. And then the last orange highlighted line is your total non-operating revenues, which is your money that does come from the federal and state government to support those normally your free and reduced meals. So one thing to note for next year is you will see a shift of money moving from the food service revenue and the operating revenues, which would be the money that students were paying for their meals, down into the non-operating revenue from the federal sources, because that money is going to be coming from the government for those meals this year. So you'll see a significant shift when you look at this statement next year. So I've just been pointing that out to all the districts just so they're aware of that. The next page then, it says food service fund again at the top, is a snapshot of the balance sheet on June 30th, 2020. So on this page, the first orange highlighted line there, total assets of just over $332,000. You have total current liabilities of approximately $65,000. And then at the end of the year, you have net position of approximately $267,000. That is approximately 3 months of operating expenses. And usually, we do recommend you maintain around 3 months, so you're kind of right in line with what we recommend there. Okay. The next page is a question, or no, we're okay. Okay. The next page it says key footnotes at the top. This is just really a reference for you as you review those full audited financial statements in their entirety. If you have any, if you're looking for any particular footnotes, we've just listed out for you some of those key ones. So I'm not going to go through those, but that's kind of there for your reference. You can refer back to those footnotes if you're looking for something in particular. The next page at the top that says federal grants. This is a quick summary of your federal grant programs for the year. So in the audited financial statements, this would be the full schedule. It's called the Schedule of Expenditures and Federal Awards. And that shows all of the information for your federal award programs for the year. This just shows the expenditures for each program for the year. So at the bottom where it says total federal awards, you can see you spent this year just over $1.8 million in federal grants. We did test the Title I and the Special Education Cluster, which is your IDEA program. And there was no deviations in that testing this year. The next page then it says schedule findings, impression, costs at the top. This is a snapshot coming directly out of your audited financial statements at the back. I like to refer to this as the report card. So this summarizes the entire audit overall. So in here you can see in the financial statement section, there's that unmodified opinion that I referenced as we started. So you have that unmodified opinion, and then in the federal award section again, you have the unmodified opinion. There was one material weakness noted in the financial statements section this year, reduced the number of audit adjustments, which details is in the financial statements if you're looking for that. Next, we do note that there was no deficiencies in our controls for the testing of the major federal programs, which we have listed here as I already reported Title I and the IDEA Special Education Cluster. And the threshold for distinguishing between Type A and Type B programs is $750,000. The next page then, it says required communications at the top. I did provide to Kathy, so if you're looking for that, I've provided a management letter and a communication letter. So this would be summarizing the management letter. So any items, areas that we have recommendations for improvements, we would include in that letter. So this is just a summary there of that letter that we provided and some of those items. So I'm not going to go through these in detail. Just, as you're evaluating we had some turnover in the business office this year, so as you're filling those positions, just evaluating the positions and whether you have all the needs that you need for that business office. Just reminding to make sure that all the journal entries can get reviewed and approved by a second person. The same thing as the federal programs and the federal reports that are prepared and submitted. Just to review the fund balance policy that is in place, if you want to consider implementing a minimum fund balance. A little bit of information about fixed asset accounting, and there's also a lot of information in that better government accounting announcements that will become effective in future years. The next page then that says required communications at the top would be the summary of our communication letter. So that gives you some information about the most essential estimates, which are the pension and the liabilities that are confirmed by the little bit of difficulties in performing the audit this year. The delayed completion of that. Again, as I mentioned, there was turnover in the business office this year that did cause that. And then also reporting that we had no changes in accounting policies this year. And then the last page, nothing really to go over, just a little bit of contact information for us. So my contact information is at the very bottom of the page, and then Rebecca is the partner in charge of this audit is at the top, and Christopher Terrell is our technical review partner. So all of our information is there. If as you review those full audit financial statements, if you have any questions, please feel free to email me. That's pretty much the audit in a summary. So do you have any other questions for me tonight?
The only, could you hear me or?
Did you hear them at all?
I can't.
Okay, the only finding, I guess the material item, again, was repeated. There was only one this year as opposed to the 4 or 5 from the previous year, and it was for the reconciliations not being done in time, and we're addressing that by adding staff, is that?
Well, yeah, if you look at the last item, I mean, if you look at the back of the audit,
Yeah,
he explained exactly what happened.
Yeah,
There was a significant amount of turnover. All the reconciliations were done throughout the year. They were completed. If you look at the timing of when I lost everybody,
Mhm.
it was right at the end of September. That's when the tax reconciliations are done, and that's when I move into the reconciliation of all the revenues.
Okay,
And I tried to do the 693, most of that has to do with an entry that I booked twice, but it didn't make it to the financials that you approve on a monthly basis.
Mhm.
It was caught prior to that, so it's not even, it didn't really impact anything. It was just due to the turnover. I had all the reconciliations done. Everybody's been assigned their reconciliations. It was just the timing of that loss in the business office. I couldn't do anymore.
okay. And again, I saw the remediation is by having staff, and,
I have all the staff
Yep.
now, and they're all in the middle of training.
okay,
I foresee, and then we're also switching over to that tax system, where I'm gonna move some stuff around in the business office to kind of level it out a little bit more.
mhm,
So once we outsource that keystone that y'all approved last year,
right,
that once that's over there, then some stuff is gonna be shifted off to this head, who's my person, my actuary. She's the one that helps me with the reconciliations and the reconciliation, so the flow will go a lot better. Food service is gonna go with the other girl that was doing all the taxes, so it's gonna flow a lot better. But I
Okay.
assume, like, we have the new accounts payable person, she's outstanding, she's picking it up so fast, and Amy's doing really well with payroll. I'm actually, there's a lot of stuff I got to shift off my plate, so I'm able to look more at the budget, so I don't anticipate maybe a month or two. I didn't even have to use the Casbo. I'm not gonna have to use it.
okay, that's
So
good.
I don't have to outsource, I don't have to bring anybody in. I feel like in the next month, you'll start seeing like the numbers improve for FEMA,
Mhm.
and then you'll start seeing more of the record stuff. I don't, by the end of this year, I'm gonna say that everyone's gonna be fully trained and up and running.
Okay,
I feel we got a solid team.
all right, thank you.
Okay?
Yep.
Any other questions?
Yeah, I'm looking through not the last page of the material weakness. I'm looking through like the list of significant deficiencies, which is I guess pages 95, almost to the end. It looks like most of the recommendations that are being made to catch these issues are one, reconciling on a more frequent basis to catch errors, and also to have a second person review documents that are prepared and submissions that are to be prepared for both for our records and for the feds, I guess. So is that something that was the recommendation?
Right, those are her recommendations, but that, like I said, that was already being done. All the stuff up until September was completed. There were sign-offs, there was Dr. Cooper signed off on all the federal stuff. Everything was signed off on. It was right at the end, the final reconciliation for the final preparation for the audit before they walked in the door. Those were the ones I could not complete.
So, I mean, some of this stuff doesn't have to do with, the reconciliation was one of my questions, so thank you for answering that, but some of it also has to do with the numbers that we were submitting through probably an electronic database for Title I, for the number of low-income students.
Oh, that was last year's stuff. She has to repeat the last year's stuff in here to show that it was done, that it's not again.
Okay.
You look at page 101, you look at the number of the sectioning,
Yeah,
it
it's
says
20.
2019.
Right.
I
That's
see.
from the prior year to show that it's been completed,
Okay.
and she did not find it again.
All right,
The
so-
only one that she found again was because the reconciliation, because the final one, I did not, when she walked in the door, I did not have the audit for her.
So for this year, when she got, the recommendation, so for 2018-19 was to have our procedures to be that two different people review the stuff that we're submitting to the feds and the state. Was that able to be done
Yeah.
last year, even though COVID meant that we were shorthanded?
Well, that's the group that we were in, so when I did that stuff on a quarterly basis, whenever we came in, he was signing off on the stuff, so I had all the signatures. I didn't have any, we have got verified, that even if I couldn't get it on a physical basis, we could do it through the computer.
Okay.
Does that help?
Yes, thank you.
Okay. Anything else?
No, I don't have anything else.
Okay. It looks like we're good.
Yep. Yep. Thank you.
I had a really hard time hearing what they were saying, so it seems like we answered them okay, and there's no other questions then?
Correct.
Okay.
Everybody's good? Thank you.
Okay, then just thank you, Kathy, and the business office staff for the audit this year, and I hope everybody has a great night.
Okay. All right. Bye.
Okay, thank you, take care.
Okay, then the second item on the agenda is the debt refinance savings review.
Yeah, I kind of gave everybody a lot of detail in here, but let me just sum it up. This just shows us the first 10 pages, shows you what our debt's going to look like over the year after they spread out the savings. On the very last page is a snapshot. It shows you that the overall savings was $784,000 present value. And what they've done is they've spread it out over the life of the thing. So you see each year is about 70,000. I think we were thinking about $70,000 to $80,000 savings on an annual basis.
Mhm.
So it did really good because the bonds went out, they scooped them right up. We still have the negative rating, not the negative outlook. And that's what every school district has the negative outlook on there because of the fact of COVID. So, sorry, I didn't have my mic on, I'm trying to talk to them now. But every district has that negative impact. When we did our actual rating call, they didn't really have to come back because we just did it a little while ago. We still stayed at the double A negative. It was just that negative outlook which everybody has. And that's what he was concerned about, that when he went out and tried to sell the bonds, that might have some kind of an impact, but it has none. Basically, real fast, 20 or 1.5% interest rate is really good for these type of loans and stuff. So we did really good. It turned out really, really well.
I just have one question. On that final page, I guess that's prepared for us. I think it's a really good snapshot of where we are and where we're going. It's prepared by our debt consolidator. Okay. So what's in the last set of boxes, there's an item for purpose. And I think because we've done so many refinancings, the reason for the original money is kind of gotten lost.
Mhm.
You know, because some of these things have already been refinanced, even though we borrowed the money. If the date of the original borrow was there, I'd probably be able to figure it out. Like if it said 2001, I'd probably be able to figure it out. That was the middle school, you know, and but those numbers are kind of lost. Is there any?
I had to do a mapping.
Yeah. Is there any way that it just?
Tried to, yeah.
Is there any, I know this is their document, I don't know if there's any way to make that a little bit clearer to us. You know, I don't know if you want to ask them, hey, can you put these pieces of information under purpose for each one? Because we got the biggest ones are middle school, the primary center renovation, the Monocacy, not intermediate center, the primary center, Monocacy building, the high school renovation, and I guess the stadium. I guess those are the big ones.
Yeah.
Do you know what I'm asking?
I had to do a mapping.
And I get
I
that,
don't know
but
he has it. I don't know that he has it because I did look at him. He actually has it on the computer.
okay.
So I do have a spreadsheet that maps it out completely because we have to have it.
Right, because like 3 years ago, if I looked at this, there might have been one that had a weird date because it had already been refinanced, but all the rest of them I can figure out what it was for.
But now you can't. It's like, yeah.
I don't know if you could just ask him if
Yeah, 'cause
you
I
put like a little note.
information and see-
Could be hard because some of them have been refinanced twice, right?
Some of them have been refinanced twice, so yeah, if it's possible to get that information on that document, because I think this is a very good snapshot of what's going on, except for the fact that I can't remember what it's for. So.
That's all I have.
Okay. So that's it for the agenda. Any other new business items or anything else we want to cover? Seeing none, then that'll conclude the Finance Committee meeting.